All right, guys. Good morning and welcome to the recap of yesterday's pay. I already did a recap just about now or just now, but after like 3 minutes, I didn't feel so well, so had to stop and come back and do it again. So, what do we have here? So, yesterday was not a lot of news. Well, actually, this week we know there's like a shit ton of news. Sorry, there's a lot of news coming up. I don't know, can we see it? Yeah, there you go. A lot of like red news, red news. Yeah, red news. Sorry. Core PPI tomorrow, retail sales tomorrow. Today we got consumer price index, which basically is like the main measure for calculating the inflation. And they expect it to be it's 6.4 right now, and they expect it to be 6. So I don't know what the current inflation is, to be fair. Let's just look at current inflation rate US. Yeah, so 6.41, and they want to reduce their, or they hope their consumer price index numbers will reduce to 6, meaning that if we have our new CPI, which will be 6, our old one is 6.4, divided by our old one, 6.4 times 100, we will get a minus 6.25, I guess. Do the calculations. I think it's around that. So 6 minus 6.4 is minus 0.4 divided by 6.4. 6 point what? Wait, give me a second. This might not be interesting, but I want to know what the inflation rate will be. So we get our 6 minus 6.4 is divided by 6.4. Oh, that's where I made the mistake. Times 100. Is yeah, it's minus 6.25, meaning a decline of about 20%, 0.20 uh percent of the inflation. Well, the goal is actually to get the inflation down to 2%, which means there has to be happening a lot more to get the inflation down. And now with the banks and everything, it's like it's not good for the Fed or for the Powell. Is a hard decision to make. He always has hard decisions to make, but like the decision he will make right now will have like I think large impact on the market. They'll have you'll get bigger moves because of the current situation we're in. It's very there's a lot of fear in the market. Let's call it like that. So yeah. But anyway, let's go about the recap. So yesterday, I discussed this trade. I made a case study in case you're wondering how this trade went. You can quickly go over it on the lower time frame before we dive into the higher time frame. Let's actually use the replay tool. So this is where yesterday ended, but we will let's see right there. So as you can see, we came into the higher time frame POI. We took out previous daily highs, previous weekly highs, and took out this Asian session or like this move down. We still had like this weekly open gap that was new weekly open gap, which was not completely filled. We also knew that we were uh, in a bullish range, and not only did we take previous daily highs and previous weekly highs, but we're above old highs in the terms of structure, knowing that meaning that like the highs, and we can look for sells into our discount to look for longs. So sells into discount to look for longs. And we also know that we had this internal range liquidity that covers like basically all these highs. And above that, we had a 1 hour PY. So clear. We tap into that, or actually, we don't even need the PY, but we need the liquidity that's been taken. You can see on the 1 hour, we close below. Next, like the very strong impulse during Asia, closes below. Then we get this bearish candle that wicks above and then closes bearish, showing us that this is a liquidity grab or rejection from that level. Then the rest of Asia is pretty dead as we come into Frankfurt and London. Sorry for all the let me, if I put it more like this, it will be cleaner. There you go. And then okay, what is this? Hold up, OCD. So, and then we just about like on MT4 and on Forex.com it was cleaner, but I started using FXCM again. But on Forex.com and MT4 it was cleaner. We took Asia highs, and doing that we took some internal range liquidity. Why I class this as internal range liquidity because there was a bear structure. That's also where these early sellers came from, as you can see over here. So we took all those highs, we took liquidity, tapped into a 1 hour PY. What did I want to see? So I'm using some new concepts, right? I wanted to see the 5 minute market shift, aka breaker structure, aka that swing being taken out. That was my reason to look for shorts. Then we get a high, a low, or low, a high, higher low, a higher high, a higher low, a higher high. So if you go to the 1 minute, we can actually see it's my complete, it's the same entry drill, just different type of entry. See, early sellers taken out. We even take Asia highs. So we got this move. This is like the move that caused to take the liquidity. So we take 50% of that move. It's the buy to sell move. We take 50% of that plus 1 pip for the what's it called? For spreads and everything. As you can see, it actually sits on a 50% of the bearish leg as well. So we come into the discount or into the premium and we sell off. We don't even come up here, which is great. This is like a great setup. And if I use my old entry drill or my old way of entering, I would have never been tapped in. So happy with that. That's good stuff. Then using the same concept again, we break bearish, we reduce our risk to just above stop loss, where you actually can see the candle over here. Just above that candle there. And then we sell off. And we have this fair value gap from this bullish range. So I was like, what am I gonna do? What do we know about this fair value gap? There's not much liquidity over here to the upside. The liquidity is quite high, so it's not like build up liquidity before the fair value gap. And there's not much below here. There's not like some disruption or lows really. And we had also this gap. In addition to that, we had this gap. So I was like, all right, I have a slightly bigger entry than usual, as you can see, 9.5. So let's be conservative because I need like 50 pips to hit a 1 to 5. It's quite large. Well, it's not conservative in that sense. It's just it's felt better to me, 45 pips. So closed 80% at 1 to 4, making 3.2%, and then closed the rest of 6.2. Total of 4.2%. So 4.5%. So I'm happy with that. Now we can delete this finally. Then you can see here, this is our new buy to sell move over here. So that's our new POI. I need to make it one darker. It's too bright. But all right. See, come in. I tried to short, or I didn't try to short it. I was just marking up because I don't trade New York anymore. But let's go about it. So what happened? Why are we on a high time frame? I already told a lot of stuff that we will go and again talk about the high time frame candles, talk about structure. So we close this week very bearish. Well, not bearish, but if you put a, you can see we retraced almost 50% of that candle, the entire candle after taking those highs. So that's why in my forecast I was saying, all right, we can see price coming down lower, maybe then come up higher. But then the bank collapsed, and there was also some shit news. So we instantly took the previous weekly high, previous daily high, tapped into here, and then we turn around. Actually, why is this above? Oh, because of New York, we can higher. My bad. Yeah. So that happened. What can we see? Again, that closure below, still the daily close below this area. If we go to DXY, we can see that DXY still has room to the downside for now, but we are inside a daily PY, so we actually came below that. That's interesting. So we now want to see like a 4-hour shift on here, or maybe a 1-hour shift. Yeah, 1-hour shift will be decent. So let's see if we already can see one. Yeah, we can see that we have a shift over here, but it means ideally we want to see this one being taken. We got the liquidity sweep over here, so that one being taken is like a perfect indication of, all right, we're going long, meaning that we are going deeper on the euro dollar. But that's for now. I'm not that good with the XY yet. I have to practice that. Oh, this interesting. So we got this buy area. Actually, can put it up here. And then use the 50%. Let's keep it over here so I can do my analysis. So we then took out this is the wrong chart, right? No. Why is this not on the my time frames? All right. Anyway, if I just put it Asian, will be all right. Yeah. So we took out Asia low then, and what can we see? We come into this gap, and we basically form a new structure, right? We have a low, high, higher, low. I don't think this is a high. I think it is. So if you take it from this one, we already reached discount, and we come above again, and then we break bearish. So shorts would make sense. But from this gap, you want to look for longs because we're below Asia low. You can maybe use it as a adding confidence, this new weekly open gap that was not completely filled yet. So you can look for longs from there. Then we come lower, and then we can see our old entry drill presenting itself, I think. I'm gonna make sure. Oh, wait, where? So I don't want to be distracted. Yeah, so it's a tricky one though. But we essentially see our early buyers again over here. They take out these levels and this level. Essentially, this one is respecting that board block over here. So that's the thingy, but yeah, so broke that. Should be green. This Asia low being taken, knowing that dollar is weak. So that's the big thing in my mind right now, that the dollar is weak. So although dollar index is saying we can come up higher, especially on the high time frame over here, can come into the for value gap, we get the bullish break. But this bullish break might just be it. We didn't tap into that for value gap over here yet. However, maybe there's something on the daily. You can see we have our volume imbalance over here. And if we pull that across, actually, what can we see? It's like a support and resistance area. See? There, that in there, that in there. So it's not a coincidence that that area became a volume imbalance over here. We couldn't predict it, but we know that there's a reason why it is. So this might be it. This might be the way that now we're going lower because it's almost completely filled. And if we go lower, that means higher for the US dollar, for the euro dollar. All right, now down. I'm just taking my time with this, by the way. I'm not really bothered about catching trades, although there's not much news during this time now. But I got a good trade yesterday, so and I kind of want to see what price wants to go. I want to look for longs from here, maybe. That would be great. Below Asia, but below Asia is not enough. We need more to cut these lows. So, but anyway, going back into that piece of price action over here, we got our London Open. So there's another concept. If we put our charts to New York time and we put a line at midnight open, midnight, and at 8:30, that's stock market open. And there's like, if we below this open price, I can't see it good right now. I think it's over there. So that's the open price. Above that means we are in a premium, meaning we could sell. Below that means we are in a discount and we can look for buys. Now, adding to that if we're below the open price of 8:30, we are in an even deeper discount. So that's like a deep discount, and above this is like a deep premium because we're above both the 8:30 time opening price and midnight open price. I don't use this concept, but learned just about yesterday. But we can see like right now we have reasons to sell off, so you could use that in a way. And yeah, if we fast forward that, we can see that price sells off, and we're probably somewhere around that area right now. All right. So in terms of longs, you have your some form of early buyers over here. I wouldn't call this your early buyers. Why? We got a high, low, lower high, lower low. It's not like strong early buyers. Second thing is we're outside of a trading area. Let me put that back. Then this is like the proper first bullish break buy. We get a high, low, lower, low, a lower high, lower low, higher high, and a lower low. So this is like proper early buyers move here. They're taken out. Then we get a minor break over here. Let me call this early. Let's pull this across, zoom in. And over here you get your minor bullish break structure. This too minor for me. I want to see this one. So there's actually not a break. There's just this liquidity building up over here. And yeah, we got that one. We got like this liquidity building up over here. So there's reason for price to come to the upside. We swept this liquidity over here. So longs are valid. Yep. And then you get your entry from that block. You can take a 2-minute block. It's looking good. You can also say, so let's apply our new concepts. You get the buy to sell move over here. You basically wait for price to return to that, but we don't get the break from here. So this will be your buy to sell or sell to buy move. And we never reached into that yet. Um, I don't know if we're below that right now. I don't think so because we have this bullish range. But yeah, essentially that's the thing. And this is your 5 minute buy to sell move. I took the 50 minute. I think it's from here. Is it? I don't know. How did I come to? Oh, I just used that high. Yeah. So I used that candle. But that's decent, I think. Gotta wait for some markups. All right, then price comes higher into New York. And we had this bearish break, essentially. Let's remove this. Let's remove these prices. And we have this PY over here. And we can see there was no early sellers before that. So price coming into that means these are our early sellers. That's marked out. And then there, come above here, get a bearish break, and we get an instant bullish break. And that lines up with, I think, the XY again. Oh, whoa, whoa. This just happened? When did this happen? Did I miss that? What? Ah, damn. Well, it's not interesting for a trade. It's just interesting that it moves like that. This is pre-Frankfurt, and we get these moves already. Interesting. Yeah, trade safe. That's for sure. So yeah, I was like, all right, maybe you could sell here, but we got some equals over here as well. Um, so yeah, it's not like high probability. Yeah, I don't know, bro. Bro, I don't know. I just find it if London gives such a move and New York retraces like this, it's probably going up because it's either London gives the moves pre-New York, we retrace, and London and New York continues, or it's London gives the move, we continue during pre-New York, and then we retrace the opposite side. If you don't get a retracement during pre-New York, then we just go the opposite side in New York. Or yeah, or like that's most of the times, or we just continue depending on what price is, what price wants to do it. It's a bit the area we're in right now. It's a bit hard to read, in my opinion, because essentially we want to buy here, but this is high probability. But we also know that dollar is weak, so we can move from here. This is also the last leg that led to this high, so it is a valid long area. What is our internal range liquidity? We got some liquidity over here, but that's it. Yeah, there's not much to say about New York then. You can see why it gave that early seller move. That's like a perfect fake out. We reacted from this block here. Fake out sellers. Smart money they want to sell over here, they get taken out. Then same story over here. So now we took the internal range liquidity where we caught a sell from that morning. We tap into that fair value gap over here. Then we get another bear. So even more smart money trades get like induced into the market by give me that. Let me zoom in. Hold on. So this is a 2 minute right now, but you see, go to the 5 minute. It's probably there's nothing. It's the 1 minute. My bad. 1, 2, 3. I just class this as a fair value gap, but anyway, I don't know why. There's actually a very tiny fair value gap on a 1 minute. Essentially, we have this 1 minute block, and we get a strong. We get a first sell break here. So more smart money sellers induced. Then another selling break over here, very impulsive. And so to induce even more sellers, then we get this bearish break or bearish reaction from the premium end of this bearish move, inducing even more sellers into the market, and we go up, taking out these equals. So yeah, perfect. Makes perfect sense that we went higher and we induced a lot of sellers by doing that. Perfect. Now we went above, and this is our last range. What happened after? So let's remove this. Get those equals. Okay, so let's take out this. So it's all distracting and make our charts look ugly. We don't want ugly charts, especially now with this different, slightly different markings. We want to keep them clean as day. So we have this area above. We can remove this. From we came above these highs, so that was my last liquidity pool. That's good. So if we don't sell off from here, I think we're going higher. Don't like get a strong sell off from here. I think we're about to break these highs. But yeah, there's like a 4-hour want zone. We want to reach into that 50% before we look for sells or low time frame sells. So yeah, that's basically it. That's what happened for today. Let's go on today's price action. I want to like make a forecast based on this, but we already have more price to work with. So why not use that? We broke bullish, still the same range. Actually, our premium, our discount is now placed a little bit higher. We have this move where we can look to buy from. This is a 15-minute demand zone. 15-minute. I think I should include this candle, but I'm not sure. We'll ask. So I see price coming in here. Hopefully get a reaction and continue up, or we come deeper. That's basically it for today. I don't think there will be a setup there in London with the news coming out later, but we will see. We will see. All right, peace out.